Hey, what's up, guys? Wanted to share some information with you guys today. I was going through this actually on a passive investor Zoom that I did, and I was sharing with them what is the opportunity right now that we're chasing inside of Bell Capital as we're looking at deals. And I'm sure you guys have watched the headlines. You see like inflation, the feds keep raising rates. Like all of these syndicators and these big fund managers are now not able to pay their investors or not making their debt services, meaning their loans to their banks and lenders and stuff. Like that's an opportunity. Like inside of any type of massive correction, if you guys just read that article, that PR article that came out, I said inside of massive corrections lead to massive opportunities. That's what's going on. The problem is that everybody's not going to either see the opportunity or be in a situation to take advantage of it. So I wanted to write it down because I went over this today. I thought it was kind of brilliant. I want to share it with you guys. And it's going to help because you're going to see this now. I'm going to post this. It's going to be on YouTube or Instagram or something. And then later, you're going to be like, remember, Vic talked about this because I'm looking to take advantage of this with Bell Capital for deals that I'm trying to buy. All right. So what you're seeing right now, I'll bring this a little closer. What you're seeing right now in the marketplace is you're looking at interest rates. Interest rates right now are causing pressure. They're going up. So you figure December 2023, all of a sudden at the end of December 22, rates were like 2 point whatever percent, 2.753. Now you fast forward to where we are today, a year later, rates are almost triple what they were before. So with the pressure of interest rates, and then also investor returns, with also the pressure of investor returns. So now we have pressure on interest rates on assets. These big assets, these big apartment buildings, or these institutional assets, they all have debt and equity on them, period, right? So all the debt right now, with that, the interest rates went up because these big properties are tethered to the debt market. So now there's pressure on the interest rates. Boom. And you have investors. And I'm talking about big investors. We're talking about institutions, Harvard, Caltech, all these pension funds, sovereign society funds, institutions, Goldman, Blackstone, BlackRock, KKR, the Carlyle Group, hedge funds over in Silicon Valley, a lot of banks. Like all of these things are happening. In the end of those things, those people are like, hey, we need our money back. We're investors. There's a redemption that needs to happen. So while these other syndicators and fund managers have picked up these properties, they're doing value add stuff throughout this time, you have this happening, right? So you have interest rates going up. You have redemptions ready to go. All of a sudden you have an owner or an apartment group owner that has these properties that now has this pressure pushing down on them. And what happens? The properties that they have now, they're going to have to compromise on price. They're going to have to lower some of the expected returns that they were going to get to themselves so they can pay off their investors, because they got to pay these guys back. Again, like I was bringing up who their investors are. These big players aren't little people. These people are like, hey, we dumped $50 million. We dumped $1 billion on you, and we want that back. You said 5 years, 5 years is up. Or you said 3 years, we had a two-year hold off period. That's done. It is time to start giving our capital back. So you have that kind of pressure in the marketplace. And when you look at it, you have rates and returns borrowing down on apartment building owners. Now, the apartment building owners, the properties they have are good properties. These are institutional quality properties. And some of these owners' partners are like these are big players. So these aren't like, even though there's the stress pressure on the owners of these groups, the distress isn't always going to be the asset, right? We'll put this as the asset. This could be a Class A asset, right? Because a lot of these properties are Class A assets, Class B property, multifamily properties that have to sell because they have this external pressure. But with that pressure, it's going to bring the pricing down. It's going to make these owners compromise on their price. And they're going to say, hey, you know what? We got to come to market. And I'm not talking about a mom and pop owner. I'm talking about some of the biggest players in the apartment building segment of the market ever. They have thousands of units. So when they're looking at their portfolio, it's not like, your grandma, your auntie, and your uncle who own a couple of duplexes, fourplexes, and 10-unit buildings who have to sell. This is a group that says, hey, look, we have a spreadsheet with 500 properties on there, 500 communities. Of the 500, these 40 have to go. And they got to go at whatever it is. We got to run our process, come to market, get the brokers that know these assets the best, and let's go to market and get the best price that we can for them. That best price is probably going to be at a discount because everybody's subject to this new interest rate adjustment for now, right? So if you can take advantage on this really small window, this window will probably last. I figure it's looking like this. I figure this window is going to come up. It's going to go here. This is the buy period, which is where we are right here. In this small area, and then it's going to go back down like this. This opportunity, right, is going to be the opportunity of a decade. You are barely ever going to see this opportunity come again. But this right here is a strike part. We're right here right now. I think right here for 2023, that's where we are right now. As we move closer to 24, I would even say 25 and stress that out. Let's say 2025. This right here is going to be the opportunity. I'm going to buy more property in 2023, 24, and 25 than I have in my whole real estate career. Why? Because this opportunity, this 10-year opportunity maximized is going to actually, it's going to be the biggest wealth builder ever. That's why I'm really pushing Bell Capital, and we're raising. The faster we can raise capital, the faster we can all hit pay dirt together. Because the faster I can raise capital, the faster we can pick up assets, the faster we can go ahead and we can build. I can build this portfolio with you guys, and then later we can refinance. The rates are going to come back down. Rents are going to continue to go up in this country, period. But in this cycle, no one's going to be able to get a deal. It'll be here. This is what we've all really been waiting for. But I wanted to share that first piece with you. And I want you to picture that in your mind. Just remember that. As interest rates cause pressure on this side, investor returns are causing pressure on this side to the owner. They're going to lower their price expectations on their assets. They're going to exit some really great assets that they would have never sold under any other circumstances. And that's going to be the opportunity. So that is really what's happening, guys. So when you watch the news and you watch the headlines about defaults, interest rates, inflation, the pressure that we are taking advantage of as it relates to buying multifamily properties, Class A, Class B properties in great markets like San Diego, Orange County, Hawaii, things like that, which are our target markets. This is the game that I'm looking at right now. This is the game that I'm playing. But I wanted to kind of put it in writing because we just went over it on the Zoom. So look, if you guys have questions, make sure to reach out to me. You can go to bell-capital.com. That's our website. You can schedule a call with me, or you can go to bell-capital.com. I'm sure the link is going to be up there, and click the link that says get started. It'll take you to our investor portal. You can register there. As an accredited investor, you can take a look at the current open fund. If you're accredited, you can invest with us. You can do your soft commitment. You can research the paperwork. You can take a look at the private placement. You can take a look at all of it. Totally transparent. I want you to see it. You have to do your due diligence. But this is the opportunity right now that I don't think we're going to get this opportunity again for another decade. It'll probably last between now, 2024, spread into 2025. I'm sure you guys have heard it. All the other big players are saying stay alive till 25. But it's not about staying alive till 25. They're just holding on. If you're a guy that's trying to buy like me and you're out there hustling and grinding and trying to source deals and trying to take down deals right now, it's not stay alive. It's dominate. It's dominate the whole way, right? And I want you to do that with me. I want you to invest with me. I want you and I to meet each other. I want to help you. I do. I want to help the little guy invest in these deals that we would normally not be able to get. That's why I started Bell Capital. So hit us up. Let me know if you need anything. Like this video, share this video. If you hate this video, give it a thumbs down. Don't be a hater and a hider at the same time. Oh, and like and subscribe to my channel. Put a comment if you want to. If there's something you want me to go over, you have a question, put it in there. I'll make sure to get to it and answer it. Somebody on my team will. Let me know, and or we will get straight to it. Looking forward to it, guys. Have a great day today. Go get after it. Let's go.